You did crazy, oh, you ain't on a payroll. Can't be hanging with the same bros. We don't even go to the same show. So please be quiet, I'm being polite. You did crazy, oh, you ain't on a payroll. Can't be hanging with the same bros. We don't even go to the same show. So please be quiet, I'm being polite.
Hey yo, T-Beats, you killed this one, no cap.
Ice cubes up in my cup. If it's spice, one pour it up. She's a bad influence and looking like one of us.
Hello guys and girls and welcome back. It's Big John here. The at's at the bottom of the screen if you'd like to listen to my music, and so is all the relevant information I'll be speaking about in this video. And today what I'm going to be doing is I'm going to be showing you how to use Heikin-Ashi candles on a 15-minute chart and be able to scalp some types of trades without thinking about it too much. You know, a lot of traders, they're always overthinking how to get into trades and things like that, but what I'm going to show you in this is how to use Heikin-Ashi candles and the TDI to gain simple entry in London, New York, or Asian session. Let's get into it. Okay, as you can see, I'm now on my chart. This is an M15 chart. Right here, you can see it's a 15-minute chart. I'm going to go through a few pairs showing you how this setup actually works and the trades, the win to loss ratio, doing this type of strategy, not thinking about it too much. As you can see, I've got one of the main confluences on here. On my chart at the moment, I've got Heikin-Ashi candles, week and day separator. I've got the Asian range indicator, and I've also got a TDI at the bottom. So all of these, I will show you the settings at the end of this video, so you'll be able to add it to your own chart on TradingView. I am using that platform at the moment to do the analysis I'm showing you, and I'll just give you a little brief breakdown of what we're going to do. I love these candles because they reduce a lot of the noise on a chart. It helps a lot, so you can see that you can almost print out second legs of M's and W's. So you can see this was a second leg here, and it was telling me that I could pretty much sell here, and it was telling me this was happening in what, my New York session box, which is always yellow for me. So when a trend is being established, so this was pretty much a W pattern that formed from here to here, from here to here, and then when the W pattern was established, we can see that this candle here closed with no wick on the bottom. So when the trend is changing, you can see it was red, and then we started getting small green candles, and then eventually we got a green candle right here, Heikin-Ashi candle with no wick on the bottom. And then look at that trend move that just happened there for a W second leg. So when you're trading N's and W's, look how fantastic this is. And you can see the same thing happened here for the sell that happened in New York for the reversal. So the same thing happened. We started getting green candles, second leg of an M. This is the M here, right here, second leg here. And then you can see there was no wick at the top of this candle. So this is perfect. And when that happens, that means it could be a strong trend for a sell. So you could follow price going down with these Heikin-Ashi candles like that. And this would have been a perfect 2-time setup for you in a trade in this day. But how we're going to be using this today is I'll switch back on my TDI and we'll go over to here. So I've already pre-marked out all the wins and the losses just to help us, and I'll give you the rules for entry right here. I've got the entry rules, which is 1, we're looking to pick a session. So we're looking at Asia, London, or New York, depends on where you are in the world, what works best for you. I prefer to trade London or New York. And then the next thing we're looking for is to wait for the TDI to get to either 80% overbought or 20% oversold. That's what we're looking for. So you can see my zones are here. This is 80% overbought. I would have a trigger zone for a sell here, something like this, as you can see. And then if it was to go lower, then I'd have a trigger zone for a buy just around here, something like that. Then our next confluence is we got to wait for the TDI to cross bearish or bullish. As we can see, there was a TDI cross right here. And then our fourth confluence is to wait for the HK candle to do what? Close with no wick at the bottom or the top. And why I say that is exactly what I just explained to you before. So you can see when this happened here, let's just move this out of the way slightly so we can see. There was no wick right here. No wick at the top of this. So therefore this candle was most likely going to be a trend starting for a bearish sell. Doesn't have to be all the time, don't get me wrong, but that's why we use the TDI as an extra confluence to help us with these types of trades. So that was a sell. So we're going to go through all of these types of trade setups throughout various pairs, and I'm going to just show you what the win to loss ratio was on these trades. So this should have been 20 pips here. So we just move this back up to 20 pips. This was a winning trade, a 1 to almost 3 winning trade. So even though it was a winner, you would have won 3 times the amount that you needed for this trade. Instead of 20 pips, you'd have won 60 pips almost. Yeah. So we had our session, which was coming into London session here. We was above the 80 right here. You can see we had a bearish cross. And then once again, we had the candle that closed with no wick there. And that's why you caught this trade. So we'll just go through all the pairs quickly, just so you can see what I'm talking about in terms of how many actual trading instruments do this in a week, in a day, etc. AED CAD. So we had a bearish trade right here. We would have got in the trade around about here. We had a TDI cross right here. So we would have got in here. Didn't hit our 20 pip stop loss. Would have gave us at least a 20 pip trade if we took that. If we was going to keep this trade and we didn't come out at TP1, then it would have given us how much? It would have given us a 1 to 3 trade right there. Beautiful setup. There was bearish divergence right here. Look at price going up, TDI going down, as you can see. And that was a nice move. We had 2 setups on this pair, AED Swiss franc. Remember, I'm on the M15 chart. You can see here price was overbought. We had our entry here. Wherever this starts from is where I've put the entry. So this started from here, so the entry was there. We had our stop loss, which was just above here, which was 20 pips. It went down 35 pips. So that was just a 1 and a bit trade. So we would have won that. Same here again, 30 pips, 20 pips. So we would have won that trade. There was bearish divergence here, as you see from price action. And we would have won that trade. Here we can see here, there was bullish divergence, AED JPY. We would have won this trade as well right here. And this was more than what we needed. It would have gone up to eventually, again, another 1 to 3 trade. Perfect. So the whole aim is that when you're winning more, or you could say 3 to 1, it depends how you do it. You want to have wins to loss, so it would be 3 to 1 realistically. And you want to win more than you lose. So if you're winning 3 to 1, that means that even if you lose a trade, you're still not going to lose all of the profit you've made. If you've won a trade that's 3 to 1 and you lost your next trade, you would have only lost 1 portion of that 3. So therefore you're still blue times 2. So we have a lot of winners here, and I'll give you the statistics at the end. And most of them, once again, were more winners. You still would have been very blue and very profitable. Now, this is a tricky pair. So when you get pairs that trend throughout a whole week, you can have an issue with this strategy. But I made sure I put it here so there was true transparency. So it's not just me showing you, oh, you're going to win every trade. So once you have pairs like this that seem to trend for the whole week, it can cause an issue. Because even when we had our confluences for entry, which was like round here, you can see that the pair would have hit your stop loss and kept trending down. So it can happen. And if this does happen as well, pay attention to maybe some type of pair correlation, because this happens with a few of the NZD pairs. And that's the NZD on the second half. It happens with a few of them going through the week. So we would have lost that trade. We would have lost this trade as well. Now, this pair here, we would have either won this trade or taken it out of break even. But all of these pairs that were at least TP1, I do say you would have won that trade, because in all fairness, if your trade management is correct, you should be putting your stop loss at either break even, which is at entry, around about here it would have been, or you would have taken at least partial profits at least 20 to 20 pips on that trade. Here was a nice clean winner, so it would have been a 1 to 2 or more, or 2 to 1, whichever way you like to say it. Here would have been another one that would have pretty much been just over a TP1 trade. So we won 40 pips, but we got 28, so still a winner. Here, once again, fantastic trade, as you can see, all the way up here. This would have been a 100 pip trade if you stayed in this trade today. There was a lot of fantastic buys. Confusing though, because we did expect a lot of pairs to sell, but it was a fantastic buy on CAD JPY. So if you did manage to get that in there, you would have caught this trade here. There was a sell right here. So this one here was 36 pips, so it was just almost a 2 to 1 trade for you, but yeah, perfect. You would have won that trade. Euro AUD, as we can see here, we have price at the 80%. We have our Heikin-Ashi candle close with no wick above there. We also have a bearish cross. We would have won this trade here for more than what we needed if it went down a bit more and we kept it in there. Once again, 3 to 1 trade. If you held this trade, never actually broke your stop loss, and you would have been able to make even more. You would have made a 4 to 1 trade. You would have had a loss here. You would have had a loss here as well. Notice how losses are happening a lot of the time when divergence is happening. So the TDI was going down, price was going up, which created divergence. Your move would have come and you would have been able to get at least a TP1 trade, but divergence can happen. It's manipulation in the market. You have to lose some trades sometimes, but you see how it rewarded you here. I made sure I pinpointed this one out so I could show you guys and girls, because you know I'm always trying to give you the source. Even though you lost these 2 trades here, which would have been, once again, just 1 loss out of all the trades I've just mentioned already, you would have been 3 or 4 places ahead, because you're doing 4 to 1s, 3 to 1s, 2 to 1s even, in terms of risk to reward. You would have won those trades, yeah? And now you would have lost one here, let's say, but now when it came back with the winner at the end of this week, if you persevere, you don't give up, treat it like a system. When you got trading, treat it like a system. You don't have to worry too much about all of this stuff that's going around and what might this do and what might that do in terms of, it might be fundamentals, it might be, you know, flying, whatever strategies and all of it. Don't worry too much. I tell people in my group all the time that yes, you find your strategy, yes, you get there, but you want to get to a point where you treat it like it's a system. So you do not have as much emotions in the market. Once again, you would have come back here and look at this. This was 90 pips from a 25 pip stop loss. Now, this was a 25 pip stop loss because the ADR was at least 104 pips on this pair. So the bigger the ADR, you want to have a bit more of a bigger stop loss. The smaller the ADR, make your stop loss a bit smaller because it's only realistic to say you want a certain amount of pips from a pair if it can only do a certain amount of pips in a day. And the ADR means average daily range. I do have a video on that as well on my YouTube channel. It'll be in the description below. You would have made at least almost a 4-to-1 trade on this one here, right here. Euro CHF. So this is an example of a pair with smaller pips. It only does 47 or 44 pips on average a day. So now I've got a 10 pip stop loss and I'm looking to gain 20 pips to get a 2-to-1 trade. So this was a 1-to-1. So I would have won that trade or broke even, but you could have said you would have took your money on that. Here, again, we can see this now. The next trade it gave me for opportunity, 10 pip stop loss. I would have won this trade by 45 pips right there. You might be saying, okay, how do I exit these trades? Now, what I would say is when to exit these trades is try and get at least your 2-to-1 in the day or minimum your 1-to-1. And try and get that before the day closes. You got to hold these trades. Just try and hold them. See what happens. So you would have entered here. You did not get it. So you would have still held to try and get more pips in that day. And then eventually you would have got all of these. You can also use the TDI, but the TDI crosses over a few times. You can use reference on my TDI video, which will also be in the link below. But you want to just try and hold these trades to, you know, get what you want from them, which is 2-to-1, you know, ideally. 1-to-1, okay, but 2-to-1 ideally or more. Yeah, so you would have won this trade here, as you can see right now, 20 pips, 10 pip stop loss. You would have won this trade again. You can see this one, 80 pips with a 10 pip stop loss. So this was like a 8-to-1 trade. Absolutely fantastic. Brilliant trade. You would have either broke even here or you would have won this trade because it was 1-to-1. Here, again, you would have now done a 3-to-1 right here, pretty much so. Just shy of that by about 4 pips. And this one here would have hit stop loss. Now, this was a funny one because it did go here, so it did meet requirements. It also did close with a candle with no wick at the top. It was a stop loss hunt in London session. Unfortunately, you might have tried to say, okay, let me sell here. So I'm trying to be as fair as possible in showing the win to loss ratio. Like I said, I'm not trying to say that everything's perfect. You still would have been at a win in this pair because you would have won this pair or at least broke even. But this one gave you a 3-to-1, so you would have been up and then you would have lost one, so you still would have been ideally up on this pair overall. Euro USD, so this one here would have hit a stop loss. This one here was a winner though, and it was at least a 1-to-1 trade. But then if you held on to this, did your analysis maybe top down, you could have found support resistance and you would have been able to hold this trade for, there you go. So this is more. So this is like a 3-to-1 trade or 3-to-1 and a bit more, about 14 pips more. Now this was a tricky one. It came so close to your stop loss here. Now my entry was here, as you see the trigger was here, but for my entry to be here with the trigger being here as well, at the same time I had to make sure I've got 50 pip stop loss. Why, when you ask why I have a 50 pip stop loss, because ADR is 135 pips on average a day in this pair. There's no point me having a 20 pip stop loss because it can hit my stop loss. I need to be a bit more realistic with where my stop will be. So I said, you know what, on these pairs, I'll put a 50 pip stop loss because they're over 100. So I'll have something like that. Almost hit my stop loss. They really tried to push me out here if I was taking this trade. Right there, they tried to push me out on GBP ORD, but then held the door. And now look at this trade right now. You can see straight away, all the way up. And then if you held it even more, this would have gone all the way up for how many pips? So I was risking 50 pips, but I would have been able to make almost a 3-to-1 on this trade. But it was a 2, just shy of a 3-to-1. And we can see here, this was GBP CAD. Again, I'm on the 15-minute chart doing all of this. I know people might ask in the comments below, but it's a 15-minute chart. You can see here, we had our entry confluence here on the TDI. We see our session here is New York. We could have got this one here. This was at least a 1-to-1 and a little bit. So I would have said you would have broke even or made profit, but most likely you would have closed that trade. You see, you just passed about the high here. It would have made sense. Your TP would have been around here for understanding of where price might, you know, stop, act funny or whatever. So you would have won that trade, I would have said. And then right here, you can see you've got a sell here. So this is a 1-to-1 again, 50, 57. You would have won this trade, 26 pip stop loss. This was 67. So let's just say this is about 25. So this was like a 2-to-1, almost 3-to-1 trade. You can see right here. Yeah. Unfortunately, we didn't have our confluence of our trigger here. This was a beautiful trade if we would have, but then you could have still been in this trade right now for the sell. Sadly, we didn't manage to catch this. It just went shy of the trigger zone here. Imagine the trigger zone got hit here. Look at that trade. This trade was how many pips? Let's check. This, oh my, 200 pips. If only it hit the trigger. It did hit the medium trigger zone, I'd call that, which is the 30% you have here. It did hit there, but realistically you want it to hit the overall. So sometimes if you do want to take trades like that, you know, I'd say be very, very careful, but you know, you take a lot less leverage, maybe risk a tenth of your account or whatever, and take those types of trades. But yeah, you never know if it's going to do this. This was a news event. This doesn't happen all the time. You're not just going to see clean buys like this or sells every single week. Okay, here. So you can see here, this is what I was explaining about the New Zealand pairs. You see New Zealand, just like the other one. This would have hit your stop loss, so you would have lost that trade. This one here would have also hit your stop loss, so you would have lost that trade. Why I'm saying that, you can see there was a trigger zone here. There was a trigger zone here for a buy as well. You would have lost that, so you would have lost 2 on this, but then you would have been rewarded with this after. So you would have lost 111. You would have lost 50 pips, but then you would have made 100 pips here. So this would have been a break-even pair. GBP New Zealand was good. This strategy works best, I've noticed, when pairs are consolidating on a higher time frame. So if pairs are really consolidating on a higher time frame or consolidating just enough, then you're going to get lower time frame price action where it goes up and then immediately reverses again, and then goes down and then reverses again. So it helps you in terms of pressure points of the 80 and the 20%, and the pair's actually doing the move without going too far into your stop loss area. So you can see here, you would have won this trade here. This was a 3-to-1 trade, pretty much so. You would have won this trade here again. This was a 2-to-1 trade, and then you would have won this trade right here. Let's just check what that is. Yep, and this was an amazing trade right now. This was almost a 5-to-1 trade here. NZD CAD, you would have lost this pair. Divergence again, you can see right there. Divergence from here to here, here to here. You would have lost this trade here. You would have broke even, or at least got a win here, and then you would have lost this pair here. So this was one of the losing pairs, unfortunately. Notice they were all NZDs as well, whether it was on this side or this side. NZDs just wasn't a good pair. So you might have paid more attention to that during the week, that, oh, I've lost 2 NZDs already. Let me just leave the NZD pairs for now and focus on the other pairs because they seem to be winning more often. So this is all part of things that you learn and grow as a trader. Again, NZD, look what happened, losing, but you would have won this one, and then you would have lost this one here. This one here, lucky enough, you would have been able to win this one. You had your trigger zone right here. There was another one here, I believe I didn't mark out, just right here. So you would have lost this one here. I didn't actually mark this one out, but I can see it now. You would have lost that one and this one. So once again, notice you would have won this one, but lost that one. But notice once again, it's the NZD pairs. You would have lost this one here, but you would have won this trade here, and you would have won this trade by having, oh yeah, this one here. Now it is a 90 pip range, so you could have had like a 25 pip stop loss on this trade, but this trade was actually one of the ones I gave out in my Signal account. If you want to get any signals, the link will be in the description below as well. Very good. We just started up, but we're managing to catch these pips. We've got long-term trades in there, couple scalps, and we're working on trading plans for traders to be able to grow small accounts into huge accounts at the moment. So it's very fantastic. At the same time, I have mentorship as well. If you want to learn how to actually trade like this, or trade even with more of the knowledge that I actually teach, just hit me up in my Discord. Everything I'm talking about will be in the description below. So you can see here, divergence here. But this is the funny thing. You see, this is what I do. When I've got trades, some of my students might think, what's going on? What are you doing? Or what's happening here? Even some of the people in the general group or etc. for me in my Discord. And when I see trades are going red in the amount of trades I take, because I will take a lot of positions. I'm not one of those traders that just usually trades one pair and everything. You know, someone else can do that. It's no problem with it. But I think the market is too random sometimes when you just pick one pair. I'm not saying you shouldn't learn with one pair, but if you favor one pair, sometimes the market is very, very random and manipulation can happen out of anywhere sometimes. As I saw this pair was going more and more red out of the 15, 20 positions I was in, literally so. And my positions are very strategically taken and simple. They're not 20 positions on gambling. I don't do that. So please don't think that just because I'm taking 20 positions. Straight away that the price was, it was red. I had blue trades, I had red trades. Any of my red trades, I go and check them. I do my analysis top down. I saw that, once again, I just put a level right here. So you might not be able to see this. So I'll just change this so you can see the color. So I saw there was a resistance level right here. And what happened when price hit this resistance before? Price sold. So when price hit this resistance, I said, okay, I'm going to move my stop loss from 25 pips above this resistance here. Because if it goes above this resistance here, then realistically, I don't want to be in this trade no more, because then it's broke market structure. The previous high is high. Right now, what happened? As soon as it hit this level, boom, came straight down. And like I said, people in my Signal account, they managed to win this trade. I'll show proof of that at the end of this video as well. You can see here, USD CHF, and you would have won this trade here. So you would have got in, and there was one entry right here. You would have held this trade, and then you would have made all of this. And this was a, yep, this was a 3-to-1 trade, 3-to-1, just a little bit more, and you would have won this trade. USD JPY 15-minute chart. Now, this was an absolutely amazing trade. Such an amazing trade. You was only risking 25 pips. Reason being that you just wanted to have a 25 pip stop loss. Even though that's a small amount of pips on the average daily range, it's about 64 pips. You wanted to make sure your stop loss was below. Look at this. You can see clear as day, and I marked this out for you. There's a support level here. Price bought up how much the last time it hit this level. Again, you can see price came to this level right here before, rejected off this level in some type of way. Again, it did it here. So you know this is some type of key level in the market. So when you're holding this trade or getting into this trade with this oversold area here, you've got a good confidence to say, I might hold this trade, see what happens. You held this trade, 25 pips stop loss, 118 pips there. That was like at least a 4-to-1, if not more, risk to reward ratio. You won on this trade. Absolutely perfect. Now, I give you one better on this to make it easier. So I'm going to show you how you can set up alerts on this right now to make it even easier for you. So what you want to do this, you want to just set a horizontal line right here. So you can press ALT, Alt, and H. Yep. And then you can press right click on this right here. And then you can go to add alert. When you've got an add alert, you want to do crossing horizontal line, but you want to make sure it's the fast MA. Yep. And then you want to go once per bar close, and then you want to make sure it's open-ended, so it only closes when you close this alert. It would always be on your alert system. And then you want to go to notify an app and show pop-up. Yep. And then you want to go to create. So when the RSI crosses this level, yep, and you can see your alerts popped up right there now. Yeah. When price crosses this level, so the RSI crosses here, what's going to happen? You would get an alert. So when you got that alert, it told you, hey, now you can enter this trade. So you could have been at work whilst you've seen this, or while you've set it up, because you might look at your phone, you know, quickly, notice that price is basically, let's zoom in here, notice that price is pulling all the way down. You can see it hasn't crossed over, so you can see it's a deep pullback. And then you would have said, okay, let me put an alert system there. You can see it did go past this trigger zone. You entered. You had a nice no wick Heikin-Ashi candle right here. So really you would have entered about here. Boom, you would have held it, 25 pips. You've already done your top down analysis quickly. Could have held this trade, and there you go. Look at that. So you just do the same thing if you want to set an alert for here. You just do another horizontal line here, and then you can set an alert there. You can just make it easier for yourself like that. And then you do the same thing, TDI outside crossing. So you do fast MA, crossing horizontal line once per bar close. Again, you tick that stuff there, you go to create, and there you go. So you can have an alert at the top and the bottom, and then whenever you want to delete it, just click on it and press backspace, and then press enter to quit, and there you go. Backspace, enter to quit, and there you go. You see? So yeah, that kind of wraps it up, guys and girls. Nice quick one today. Not too much. Like I said, the settings will be at the end of this video for everything I've got in here. It's not even too difficult, my settings. And if you want to get into the Signal group, Easy Forex Enterprise Signals, please just check the link in the description below. You'll see all of that information there. If you want to get into mentorship, which is different from Signals, I teach more in mentorship, and I have, I'm pretty much online most of the days. I'm trying to make myself as available as possible to students so that I can get them on their own 2 feet in terms of trading. Please, yeah, hit me up in the Discord link below and just direct message me. And yeah, that kind of wraps it up, you know. So let's get these pips, let's get this moolah, let's have no hate, let's have positivity. And you know what, don't worry what gold is doing all day. Don't worry about what gold is doing. Oh, bonus. Don't let me forget this. Let's go here. Silver again. So I almost skipped these. I'm sorry, people. I'm sorry. Let's get this money. Yeah. You see here, trigger zone, silver. You would have won this trade. You would have won this as well. This sell right here going down. Yep. And then we're going to say gold here again. Look, trigger zone. You'd have won this. That's the wrong one there that I didn't need there. But yes, you would have won this trade because you had your trigger zone here. You would have entered, just so you can see this proof, you would have entered right here. No wick candle. You would have caught this buy going all the way up here. And then here, this is the correct one. You would have seen this. You've got your trigger zone here. You were waiting to see a candle with no wick. It appeared like here. You would have held this trade. Stop loss would have been there. And then you would have won this trade right here. Perfect. I'm not putting my stop loss there because this was here before. Your stop loss would be at least 100 pips, I would have said. So really, your stop loss would have been about here, to be fair. And then, yeah, it was almost like just a 1-to-1 and a bit. It was almost a 2-to-1 trade, but there you go. You still would have won the trade anyway. So, yeah, now this actually wraps it up. And, yeah, I hope you enjoyed it, guys and girls. Peace.